Harlan, how are you?
Hey, doing well. How are you, Mr. Porter?
I am well, thank you. Like you to meet my cohort, my partner in crime, Peter Wood.
How's it going, Harlan?
Doing well, Peter. So, what kind of crimes are you guys involved in?
All the most heinous ones.
Yeah, pretty much.
We're basically like MS 1.3.
Yeah, you guys both look like troublemakers. Not sure which one is worse, but
We've been accused of that. We've also
50-50.
been accused. Yeah, we've also been accused of being brothers as well. So,
well, that's scary.
oh, there was this small story about this very, very drunk elderly lady in an elevator in
Elevator.
zone. Yeah, good time.
Okay, this sounds interesting. Do you normally take advantage of old people? Because I'm an old person, so I'm kind of.
We both, no, excuse you. We both had our backs against the wall. We were stuck in there with her. We were trapped in there with her.
We were just standing in an elevator. She approached us.
Oh, an aggressive older lady.
Hyper aggressive. Yeah.
Sounds like you know this woman.
My heavens. We'll just get the ball rolling here. I don't know if you remember you and I chatting. It's been a couple years.
I do.
But
Yes.
I'm super, super excited to have you here today. And like I had responded, I apologize for not seeing the email earlier, but today is not so that you can lecture everybody about reverse mortgage because that's your zone of genius. I really want everybody to understand, the most significant human being in the United States in the reverse mortgage space. Who is this person? What makes them tick? And why reverse mortgage? And so that's kind of what today is about. So we're really excited to have you here. Thank you for being here.
Well, that's good. It's a big part of my life. I mean, because I have a reverse mortgage myself. So obviously I can talk a lot about that, how it's changed my life, my family, that sort of thing. So it's really kind of it's all interrelated as to who I am.
Did you have a reverse mortgage? So this is one thing that I always when I got into insurance and finance, the company I started with, I was a policyholder before I became an agent. And that always kind of that was part of my story as far as, why I felt so convicted about certain things going on there. Were you did you have a reverse mortgage before you started doing a reverse mortgage, or did you get a reverse mortgage because you already knew how effective?
Well, no, I learned about reverse mortgages when I was 43 years old. And so I wasn't old enough to get one. In fact, I hated them. And I told everybody to stay away from them. They're a ripoff. They screw the old people and hurt the kids. Just don't touch them. They're awful. And by the way, cash value life insurance and annuities, that's all a ripoff too. So stay away from them, because I listened to Dave Ramsey, and Dave Ramsey said all this stuff. So I thought he was right, and he's wrong. And I fortunately learned this stuff. So I used to buy his books by the case and hand them out to my clients. Now I still buy them by the case, but just to burn them. So we got to stop this information that's going out there. You may want.
Dave is my boy. Dave is my boy. People don't know this about Dave and I, but he and I get together on Friday nights. We watch Netflix. We paint each other's toenails.
Okay. Well, maybe I might want to help you out with that. That's scary.
No. So, Harlan, we kind of just jumped right into it, but that's how we tend to do how we tend to do things here. You hated reverse mortgages, and from what I understand, I've been around reverse mortgages for quite a while now. Post 2012, most financial professionals hated reverse mortgage. There was some re-regulation, different things that happened. But what for you specifically took you from hating it and thinking it's the worst thing ever to where you are now?
Well, I was like a lot of people where I just listened to, the gurus on, TV and reading, Susie Orman or Dave Ramsey, whatever. But I was always kind of thinking, I wonder if they're right. And it really started with life insurance, because I told this life insurance agent that came to visit me once, I said, I don't believe in cash value life insurance. I just believe in buy term and invest the difference. And so I really am not interested in what you're selling, but you seem like a nice guy. So, I made an appointment with you. And he said, well, Harlan, if what you thought you knew about life insurance was wrong, when would you want to know? I said, well, I don't think I'm wrong, but I guess right now. So he explained everything to me, and I realized that I was wrong in all the stuff that I was saying, and the A.L. Williams stuff from back when I was a very young guy about buy term and invest the difference. And I didn't understand all the changes that had been made and the wonderful thing that cash value life insurance was. And so that permanent life insurance was a lot more valuable than term insurance and understood how it was going to, I mean, I had 4 sons at the time. I still have 4 sons. It's just they were little as, you know, they were at home, and a wife that did not work outside the house because she worked her butt off taking care of the 4 sons. And so I was the primary breadwinner, and I kind of learned about this whole thing about how it made more sense. And then I thought, wow, I can't believe I was wrong about that when I got educated on the whole deal and started reading Nelson Nash's book and, you know, some of the other books out there about cash value life insurance, and realized, well, Harlan, you were wrong. So a little while later, when I discovered that I was wrong about life insurance, I get this thing in the mail inviting me to a reverse mortgage seminar training for loan officers in Miami in January. I'm living in Wisconsin. Well, if you live in Wisconsin and you get invited to Miami in January, you always go, even if it's something you're not interested in. So that's what I did, with a big chip on my shoulder, having zero interest in learning about reverse mortgages, but a very big interest in cutting out of the class and going to the beach. It was a 3-day class. I never did cut the class. And what I learned there started the whole process of changing my life, my career, the lives of hundreds, thousands of other people, because I started realizing, just like that life insurance guy said to me, if you found out you're wrong, when would you want to know? Well, now I have that on my business card. If what you thought about money and mortgages were wrong, when would you want to know? And so that's when I really started, Carson, getting into this whole thing of, how does all this financial planning stuff fit together? So what about life insurance? What about annuities? What about IRAs and 401ks? And realizing that I was ignorant about all this stuff, I started talking to as many smart, incredibly intelligent people as I could, which wasn't hard. My wife said, don't say that because everybody's smarter than you, but you set a low bar there. But I started talking to some CFPs.
Wives might be related.
You've heard that too, yes. So I started talking to these CFPs and CFAs and PhDs and all of these really smart people in the insurance business and at think tanks like Texas Tech University, Boston College for Retirement Research, the American College, Jamie Hopkins, Wade Pfau, Ed Slott, David McKnight. I mean, I just pounded away on all of them, including my own financial advisor, and said, what if I don't pay off my house and I put a bunch of money in life insurance and annuities and brokerage accounts? And what does it look like for right now for my family? And what does it look like down the road? And we realized that if I would do that, I would be better off. And so would my wife, and so would my kids, and so would my grandkids when I had them in the future. And it was just this big, brilliant thing. And so in my career, it completely transformed my career. And I started talking to everybody about it and started partnering with financial advisors to say, hey, how does this fit in with your business? And do you realize that if you pair these things together, that we're going to change the world and we're going to change a bunch of lives? And so in a short story, that's essentially what happened. Is I ended up becoming an evangelist for a different way of retirement and changing lives in retirement, not just my own, but everybody that I would talk to. So that's the great, that's what I've been doing for the last 20 years since I was 43 years old. I'm now almost 65, have my own reverse mortgage, have, 7, 8 insurance policies and a bunch of annuities and money in my brokerage account. And here I'm a farm kid from Wisconsin who never went to college. And I'm smarter than a lot of these other people that have been talking about the same old talking points. Buy term and invest the difference, put a bunch of money in your 401k and don't worry about the taxes and don't worry about the money going up and down, and it's all going to come out in the end and you'll be okay. And I'm just very thankful that I was smart enough to realize I didn't know what I was talking about, learn from a whole bunch of people that were smarter than myself, and then have been able to share this with people that this needs to be part of every retirement plan, not just when you're broke. There was an article in Forbes magazine a while ago that was called, and the title of it was, "You don't have to be old, broke, and stupid to get a reverse mortgage," which is what everybody thinks, and that's really, or if you get fooled into buying a life insurance policy. because, the guy's that is selling you something that's a ripoff. That's the thing, when all of those things started meshing together and I realized how we could create a better retirement for our clients, that's what really changed my life and my career. And now I've got, of course, like I said, my own reverse mortgage, and the insurance policies are doing exactly what they're supposed to do. And when I die, my kids and my grandkids will be better off. They're better off right now, but they'll even be better off because I'm not trying to give them a house. I'm trying to give them some cash. And that's how you do it with Roth IRAs and life insurance. And that's what people don't realize, because everybody wants to give their house to their kids. It's like, what color is the sky? Blue. What are you going to do with your house when you die? You're going to give it to my kids. It's just an automatic thought process that is wrong. But I just kind of ramble on, and I, the bottom line is that I learned where I was wrong, and then we're able to help a lot of other people that were also wrong.
Well, and that's the
I just had, sorry,
I was gonna say that
I just had,
Keller Williams. Oh no, Peter, I'm going to say this.
of course you are. Go ahead.
I was just going to say that's the Keller Williams ERA installment in everybody's mind for the last 80 years, that home ownership and passing it on to your kids is the American dream. But for more Americans than that is the dream, it's become the nightmare. It is affording the American dream has become the American nightmare. It's ridiculous. So, Peter, I didn't mean to cut you off, but I did.
I could see it in your eyes. You're like, I'm waiting for it. Pounce. So Harlan, my dad just retired in October, and my folks and I sat down and we took a look at kind of where they're at. And I asked my mom, I was like, hey, my dad's got some health stuff going on. And I asked my mom, I was like, hey, have you ever considered looking into a reverse mortgage? And verbatim, she was like, well, no, I really want to leave the house to you and your sister, you and Rebecca. I'm like, Mom, I have a house. Rebecca has a place to live. It's like the thing that this is not my parents just moved 4 or 5 years ago. But the place you moved into, it's not my childhood home. It's not somewhere that I have real fond memories of. It's a nice place. But the reason I come here is because this is where you and Dad are. It has less to do with the building and more to do with the people in the building, right? And I was like, you could free up so much of the liquid asset, or make that illiquid asset a liquid asset that you could actually utilize to offset some expense and do some stuff with you and Dad while everything is still, you're still in the go-go years. We're not in the slow-go years yet. And it's like, if at the end of the day, Rebecca and I really wanted that house, it's like, you and Dad have a ton of life insurance. We could use the life insurance to buy the house if that's what we want to do at that point.
Well, what most people don't realize,
that's not what we would do.
Yeah. And what most people don't realize is you have to look at efficiency. If your goal, what is your goal? Is your goal to pass on $500,000 to your kids? Is your goal to give them $1 million? Is it your goal to give them 100,000? Is your goal to not give them anything and you just want to enjoy your last fourth quarter of life? What is your goal? And that's really something that is amazing that most people have not thought that far ahead. And they just repeat something like that's, it's good to be debt free. The best thing to do is have a house that's paid off free and clear. I mean, that's just an automatic belief that we are taught. And then I always ask people, well, is your house an asset or a liability? And they immediately say it's an asset. I said, well, how much money have you put into your house in the last year, 2 years, 5 years, whatever? And if you still have a payment, you're still paying on it. It's a liability. We turn it into an asset. It can be an asset, and it should be classified as an asset. Most financial advisors put it down as an asset in the on the little fact sheets. But from a cash flow scenario, it's a drain on cash flow. And so, one of the things that I've done is I thought very intentionally, people said, well, you must not like your kids very much that you're just spending all your money in your reverse mortgage. You're like these people that have the bumper sticker on the back of their motorhomes. We're spending our children's inheritance. Is that your philosophy? And I said, kind of. I said, I'm glad you brought that up because we have a rule in the Accola family to do reverse mortgage vacations. And we always do reverse mortgage vacations anytime the kids want to go anywhere. There's 2 rules. They have to plan the trip and they have to take us along with them. That's the only 2 rules. They got to take Brenda and I with them. So we've went all over the world. I mean, so far, I've only had the reverse mortgage for 3 years. We've been to Iceland with one of our sons and his wife. We've been with the whole family to Kauai. We've been throughout Europe, retracing my dad's steps in World War II, places in the U.S. and Mexico and everything else. And we've got some incredible memories. And that means they're going to get a little smaller inheritance because we're spending some of their money right now. But I believe in giving things away with a warm hand instead of a cold hand, whether you're doing it to your church or to your kids or to a foundation or whatever it is. And so really, when it comes to an inheritance, people just haven't thought it out enough, because when mom and dads die, they're usually 90 and the kids are 60. They shouldn't need a house then. They're going to sell it. And so it's maybe the grandkids will want it, but how many grandkids are there? You're going to divide it up amongst 18 grandkids? Or, it's just weird that people have not thought that far, and they don't look at just about every realtor has said you can build wealth through real estate, which is very true. In fact, baby boomers are sitting right now on $14 trillion worth of wealth in our homes. That's more money than in any one asset class in the history of any country in the world. So we're sitting on 14 trillion, but it's worthless because you can't do anything with the equity in your home. Nothing.
It's an IOU.
Exactly. So you can give it to your kids, but only after you die or when you go to a nursing home or whatever. So what it all comes down to very, very plainly is, how do you use that asset? People put money into an IRA. They put money into a 401k. They put money into an annuity. They put money into a life insurance contract. Every time you guys in the financial planning world talk to people about an investment, you tell them what they're going to get back and what the purpose of that is, that they're putting it in and then they're going to get X number of dollars in the future. I'm going to do this in an annuity, and then I'm going to get a check for $2,200 a month for, the next 20 years or whatever. You tell them how they get their money back. Well, when you buy a house, does somebody at the closing table tell you, hey, if you pay in and pay in, when you get to be 62, we'll write you checks back. We'll give you a refund of all of the money that you are putting into this house. I mean, my son, when he bought his house, of course, I indoctrinated him because he had to read my book and everything. And he said, hey, Dad, we just got done buying our house. And by the way, we read your book. Bridget and I both read your book. And we understand that we just started on our reverse mortgage. And I kind of laughed. And I said, well, Josh, that's 30 years away. And he said, I know, but our payments are $2,100 a month. And we figured it out that if, the normal thing happens from here, did you know that when we're 62 like you, we're going to get a refund of all of the payments that we've made in our house? I mean, what other first-time home buyer is going to think like that? Just somebody that's obviously been indoctrinated by their dad who wrote the book. But the issue is why doesn't everybody know that? You get a refund of your payments when you get to be 62. Just like you get money back from a life insurance contract, just like you get money back from your Social Security, the money that you put into Social Security. It's weird that we are not taught that way, but financial planners don't teach people that way. Insurance agents don't. Attorneys don't. Nobody teaches that. They just say, pay off your house, and when you pay off your house, you don't have to pay anymore. Could you imagine if I walked into your office and I said, hey, guys, I've been giving you a bunch of money for the last 10, 15, 20 years. I've been depositing into life insurance account. I'd like some of it back. And you say, oh, no, Harlan, that money's not for you. That's for your kids. When you die, we'll give money to your kids, but that's not for you. I mean, I would be ticked. I'd probably fire you as an advisor. No, but we tell people that all the time. Pay and pay and pay and pay. And, oh, yeah, when you get done paying, you don't have to pay anymore. But we don't give you anything. I mean, that's crazy. But we perpetuated that. A whole generation, 2 generations have taught their kids that. That's a huge issue.
Well, and I think you have 2 generations of realtors. I've got some realtors that are some of my closest friends and confidants.
Sorry, my door swung open. Hopefully
you're okay. The ghost in the background. Yeah, I have some realtors that are some of my closest friends and confidants. But what I have found, one of my mentors early on told me something. What he told me was, if you look at where someone is bonus, that's where you'll find their motivation lies, for better or for worse. And what I found with realtors, when I discuss reverse mortgage with realtors, they're not really on board for it. And one of the biggest reasons why, I actually just talked to one of the biggest realtors in Southern Utah, actually. They have one of the largest producing teams in Southern Utah. And I was talking to him, and he says, well, reverse mortgage is a horrible idea because real estate is an asset, and you have a $500,000 home that you now have a $500,000 in equity. You could simply just, you've been making this payment for 40 years anyways. You could simply roll that equity into a bigger home and grow a bigger asset by maintaining that payment. And they are not a fan of utilizing equity, because when you utilize equity, the next sale is off the table. And I found with my clients, we do a lot of retirement. We speak with a lot of folks that are getting near that point. And it's interesting how often they're listening to their realtor about their retirement scenario and the reality of their retirement scenario, sometimes even more than their financial advisor, the CFP, an insurance agent, or somebody else in between. It's kind of interesting that position carries more weight in that conversation than I personally feel like it should. And I'm not here to disparage realtors. I'm simply saying that their job is to transact real estate. That's what their job is, not help you extract equity from it. Have you had any experiences around that, or do you have any thoughts or sentiments on that, I suppose?
Yeah, a tremendous amount. At Movement Mortgage, we have 1,500 loan officers, and 70% of the time the first person that is contacted about making the largest decision in your life financially, typically, is a realtor who has one motivation, and that is to get commission on a sale. So that doesn't mean they're dishonest or that they're bad people. It's just that they have one single motivation. They don't have any classes on doing holistic planning. They don't understand any of this other stuff. But we have educated hundreds of realtors here at Movement, and we have seminars every single month to bring in realtors to help them be more professional, to understand that it's easier to sell a house, it's easier to sell an investment property, a second home, or whatever, if they understand the whole holistic plan. So our best clients are served by a really smart, educated realtor, an excellent holistic financial advisor, and sometimes an attorney, depending upon if that's necessary for wills, trusts, whatever. And of course, our retirement mortgage professional. When you put those three things together, the outcome for the client is phenomenally better because we're looking way down the road. And there's two problems that realtors don't understand, at least two. But the first one is they don't realize that a reverse mortgage is not just to keep people in their house and give them money so they can stay in their house. The vast majority of people are like me. Baby boomers are right now the biggest buyers and sellers of real estate. And most realtors ignore us. If they worked with a financial advisor and would understand how this all fits together, they'd jump on board very quickly. Because, for example, in my situation, I went from a cheaper house, a $500,000 house that we raised the kids in, to a house in a more expensive area that has a greater chance of increasing, that's closer to our kids and grandkids because we moved because of family, and we usually move to a more expensive area. So I parlayed my $600,000 worth of equity into $1 million house in a more expensive location. And the realtor that understood that immediately got a big commission because I knew a lot of other realtors because I had met them when my kids were buying houses. Not one of them asked me what I did for a living and asked me more information on reverse mortgages when I started talking to them. Shocking, because I'm an awesome prospect that they should talk to because I've got gray hair and I've got grandkids and I'm driving in with out-of-state plates. They should ask me about whether or not I want to be closer to my grandkids and have a home that I live in the fourth quarter of my life. So when we educate real estate agents to understand how to deal with older people like ourselves and to work with baby boomers, it transforms their business and it usually doubles or triples, just like financial advisors' business goes up dramatically because we teach people how not to pay off their house and put money like I have into alternative investments so that we have the life insurance. My kids don't care at all that I might burn up all the equity of my house by the time I die. It probably will not be all burnt up, but even if I do, they don't care because they know that they get the reverse mortgage vacations. They know that I help them while I'm alive. They know that they're going to be able to get a big life insurance check at the end. They understand that for their benefit and the grandkids' benefit, I have a reverse mortgage. And I have these life insurance policies and the annuities that take care of my income and the long-term care insurance. And I could buy all those things because I didn't pay off my house. But people that are paying off their house cannot deposit money into your accounts and your products that do so much for them because they're putting too much money into the wrong place. I asked a realtor once, do you think it's a good idea to have a paid off house? And she said, absolutely. That's like the holy grail. You get to buy a house for 400 and it goes up to $1 million and you have it paid off and, you've arrived. And I said, okay, by the way, what do I do with that $1 million house when I've got to replace the roof for 50 grand? Well, she said, you could maybe take out a home equity loan. And I said, well, then I'll have to pay back like 60 or 70,000. How does that work? So I really can't use the money in my house. And she said, well, kind of. You could sell it and downsize, she said. That might work. I said, yeah, that'll be another 2 commissions. And I'm living in a house that I don't want to live in. And so she didn't understand until I said, I want to ask you a question. Her name was Candy. I said, Candy, if I had $1 million,
that's a stripper name.
She wasn't, but
okay.
Okay. I said, Candy, let me ask you this. I got $1 million that I got out of my 401k rollover. I just retired. How about if I take that whole $1 million and put it into Apple stock? Because Apple stock is a really good company. And I mean, they got dividends and everything else, and they'll be around forever. Yeah, it's a good stock. And she said, well, no, that wouldn't be a good idea. I said, well, you're not a financial advisor, but why would you say that? And she said, well, it's never a good idea to put all your eggs in one basket. You got to diversify. And I said, I don't know that much about it, but you get mutual funds and you put some here and you put some there. And, that's how it works. And I said, then why would I put $1 million into one real estate stock in one piece of dirt, one pile of bricks and sticks in just one city and state in the U.S.? And she said, well, that's different. I said, what's different about it? It's just that now it's more illiquid. So it's okay to put $1 million into a house, but it's not okay to put $1 million into Apple stock. I mean, where's the thought process on that? So if realtors are really taught that, hey, you build up your wealth and you take some of it out in a safe, leveraged reverse mortgage at the end, they'd sell way more real estate and they'd help way more people my age to move closer to their kids and their grandkids if they really understood it, because they think reverse mortgage are their enemies because, well, we just keep people in their house and stop them from selling their house. No, we do reverse mortgage for purchase. And we make sure that they can buy the house they really want in the location that they really want, closer to their kids, closer to the beach, closer to the mountains, whatever they want. If they just realize that, hey, just a minute, I'm not in a situation where I'm losing out in commissions. In fact, I'm gaining because I'm getting people closer to what their real goal in life is. And so that's a long answer to a short question, Carson, but realtors have a tremendous amount of opportunity when they understand reverse mortgages, just like you guys have more of an opportunity because you know what you're talking about, even though you never sell a reverse mortgage and you're selling other financial products. More of those are needed because people aren't putting all of their money into, of course, their house.
It's a huge missed opportunity on the behalf of the realtor, because if they just extended a little bit of value without expectation, like I talk to clients every day and we talk about high yield savings accounts. It's like, I don't offer high yield savings account. I can't do them, but I think it's valuable enough to let my clients know that, hey, have you ever heard about this? Because this is an option. And instead of getting 0.1% right now, you could be getting 3.5%. It's like, that's 3,500 times the interest. Just because you took the money out of your right pocket and put it in your left pocket. It's still liquid. It might take you 24 hours to get to it. But the value without expectation is I position myself as an actual advisor instead of coming at them with commission breath and only taking care of that one piece of the pie that I'm going to earn money on. I don't earn money on wills and trusts, but I ask my clients, hey, do you have these things set up? Because it's a total part of the plan. And it's like you said, it's a huge missed opportunity for the realtors, because just that little bit of value without expectations, that 1 or 2 extra questions without getting into the weeds on being a full-blown holistic financial advisor, just asking a couple extra questions is going to lead to referral after referral after referral after repeat sale after repeat sale. Because if somebody bought from you once, you develop, hopefully, that know, like, and trust. Who are they going to come to the next time? Or when their kid or their neighbor or their grandkid or their colleague has a need, they're going to come to that person that they develop that know, like, and trust with. And the way to do that is by it, it's value without expectations. I'm going to give you this information because I think it's valuable enough for you to know about it, even though it's not something I monetize.
Yep.
I think too, it's a huge missed opportunity, even for figure like a property casualty insurance agent. You might do no life insurance, no annuities, no financial planning, but here you are talking with an older couple. And the one of the biggest reasons that when you get into that 65, 60 plus age range, that insurance agents fail to do business or fail to maintain business is this two-word term, fixed budget. I'm on a fixed budget. I can't afford, I'd love to keep you as an agent, but I can't afford you anymore. So I have to go to the online insurers. I have to, when all it would take is a quick little financial inventory, understanding something like reverse mortgage, make that quick little referral over. And all of a sudden you just increase your client's budget by $2,000 or $3,000 a month. You don't think they can afford the extra $10 or $20 a month to stick with you? They absolutely will, and they will appreciate that, and they'll evidence that by sticking with you, is what I found. So
that's so true. In the synergy, it's really difficult, as you just very specifically explained, Peter, to just be a realtor and only think about selling a house. When you expand the whole picture and, hey, I can help them here, I can help them with this, I don't necessarily get paid for everything. The same thing applies with a financial advisor scenario. I had a brand new financial advisor that I just met through one of our forward loan officers 2 weeks ago in Atlanta. And he said, hey, I got this client and he's kind of thinking about selling some property. I don't know much about what he's doing there. He's a pretty big real estate investor. And maybe you could talk to him, but I know for sure he doesn't need a reverse mortgage because he's got like a big brokerage account of at least $1 million, $1.5 million. He's got plenty of cash flow, and he won't want a reverse mortgage, of course, but you might want to talk to him and help him with the real estate thing. So I called him up and talked to him, listened to him for at least a half hour. We always got to ask the questions to find out what fits. He's got $1 million house and he's got $2 million fourplexes that he is sick of doing maintenance on and taking care of. Him and his wife are in their late 60s, and he's sick of messing with it at all. Well, because I've worked with this advisor, I understand. I can't sell it, but I know about life insurance. I know about the annuities because he wanted guaranteed income. He's just got a Schwab advisor that is a stock jockey that moves some stuff around for him. That's all of his 1.2, 1.3 million is with the stock jockey that's at Schwab. And he's got these properties to sell, and he's got a capital gain problem. And I said, the advisor that connected me with you, he works with 1031 exchanges, DSTs, life insurance, annuities. You want fixed income. Did you know that if we leverage your properties and do a DST with this guy, you'll have about $2 million and we'll get you about another $800,000 in cash. We'll do a reverse mortgage on your house so we can wipe out the need for you to send in $2,500 a month. And when we get all done with that, we're going to do a reverse mortgage for sure. I mean, that's what he understood right away. Yeah, why continue to make payments if you don't have to? And I explained what he wanted to do with his kids and what he wanted to leave behind. The advisor is going to have at least $2 million of additional investments with the DST and the 1031 exchange stuff. Then he's going to have about an additional, not just the 1.5, but the cash out portion. So over $2 million to invest. Some of it's going to go into an annuity. Some of it is for the life insurance for the kids because of him doing the reverse mortgage. He's got I don't know how much it is in target premium. He called me up and he said, are you going to need some money on this? I said, no, I'm not licensed. I will not accept any money from you. He said, well, can I at least take you out to eat? This is kind of a good deal. I didn't even think there was anything there. I said, yeah, you could take me out to eat. I'll probably hit you up for a $50 steak or something. But other than that, no, I'm just glad that we're changing this guy's life. And thank you for, sending him over. So he thought he was kind of doing me a favor, which was nice. I got a $300,000 reverse mortgage out of it. Big deal. But he got, I don't know how much target premium. Basically, we moved over somewhere around $3 million into both target premium and so. But you know who the biggest winner was? The client. So
imagine that.
And how many referrals, how many other people does he run with that advisor can get and say, hey, Aaron was incredible. I mean, he saved me money in taxes and he got this taken care of and I have no payments and my income is over $200,000 a year and I don't have to mess with this stuff anymore. Just a dramatic shift. And that's what we are incredibly good at. I always tell people, Harlan, when you're dealing with Harlan, you're dealing with a guy that is a one-trick pony. The only thing I can do is put really cool puzzle pieces together in the financial planning, pre-sell your products of life insurance, annuities, and some of the other things that you have, and sell somebody an idea of a better life. That's the only thing that I'm really good at. All the rest of the stuff, I was trying to put together a thing that we got from IKEA, and I told my wife, I said, forget this. I'm going on TaskRabbit. I don't know if you ever heard of TaskRabbit, but it's cool. So I just hired the guy to do it, and I started working on some really cool financial plans, and he put for $150, he put the entertainment center together. So I'm not good at
Money
any
well
of
spent.
Exactly. That's what I thought. So that's what, and I've trained all of our RMPs, all of our retirement mortgage professionals to operate just like what I do. And any 50 states, we can help somebody from the point that they're in. And there are very few people, I would say 95% of our case studies, we can put somebody into a better financial position than where they're at right now. And some of these people are in a pretty good position right now. We can put them into a better position. And what's interesting is we're looking for financial advisors that really know what they're talking about, because we've got 330,000 clients at Movement. We service our loans, young people, old people, everybody in between. And half of them don't have a financial advisor. They might have the guy at Schwab or something, but that's as far as it goes.
So you mentioned, and being in insurance and financial services, acronyms are my jam, but you mentioned a DST. So just for anybody that doesn't know, what's a DST?
It's a Delaware statutory trust. I did that when I sold one of my pieces of real estate, and you can use it as a leverage scenario. I was about 40 to 50% leveraged. So it's the property that I had, which I had big capital gains on because I owned it for over 20 years, went into the DST. And then that was part of my 1031 exchange to a Cantor Fitzgerald property in Denver or in Dallas. And then I was able to not pay any taxes, defer the taxes. But at the same time, I didn't have to put all that money in because it was leverage money. And a lot of people they don't want to have their rental property paid off. They want to have it leveraged. And so the DST works with that being able to be leveraged into a 1031 exchange. And I don't mean to get all detailed about that.
No,
that's what this advisor specialized in addition to the holistic planning. I mean, he sells stocks, bonds, he sells life insurance, he sells annuities, he's got the real estate stuff, oil and gas partnerships, whatever. I don't know what he all does, but specializes in the overall tax planning, and especially with people that have real estate properties. So when I ran into him, it was like, wow, how haven't I met you before? Because you're the one that is having people transfer money from not keep all of their money in real estate, but to have the money where it is much more powerful. So a lot of people say, you're really nice to your insurance guys and everything. And I said, I'm not nice to them. They're nice to me. They sell me products that give me something that's way beyond if I put the money somewhere else. And they said, do you realize that they make big commissions? And I said, I don't care how much they make. I care what they do for my family. It's weird the way people always worry about how much money somebody's going to make instead of.
It is funny. I always tell folks that if you're really that worried about the 5 or 6% commission your insurance agent is going to make, sit down and calculate what for example, your Schwab guy has made, taking 1.5% on you for the last 30 years, and then tell me that you're still worried. You won't. You won't.
Not only that, but the way the commission stuff works with life insurance, with the spread products that we offer, it's different than an AUM kind of thing, right? Like if there's a 1.5% and you take $100,000 and you put it into an AUM, well, now you have 9850 working for you, because that 1.5% comes right off the top. With the stuff that the insurance products offer, you take $100,000 and put it into some kind of fixed indexed annuity, you have $100,000 deployed going to work for you right now, day one. And the agent does make a commission, but that commission comes off the spread, not off of your initial contribution.
Well, the thing is a lot of people worry about how much something costs. I mean, when it comes to reverse mortgages, there's a 2% fee in every reverse mortgage for the insurance, which is expensive. But what do you get for that? It doesn't matter. I mean, I've saved, since I've had my reverse mortgage, I've saved $30,000 in taxes just this year alone on being able to write off interest that was stacked up. And we go through that with advisors all the time of how reverse mortgages fit into tax planning. So when I've saved that $30,000 plus, I've saved over $100,000 worth of payments that have went into my insurance contracts, into my annuity contracts, into other investments. I'm way ahead of the game. My net worth goes up. What people don't realize, when I worked with Wade Pfau, this is something that's fascinating. When people do a reverse mortgage early in their career or early in their retirement, three things happen. Number one, their cash flow goes up. Obviously, you don't have a payment anymore. You're getting money. Number two, your income tax goes down. I already mentioned how I just saved $30,000 this year. And number three, your net worth goes up. Well, who wouldn't want those three things? Because when I put money into your vehicles, your investment vehicles, instead of me putting it into my house, the results are much greater. So I always tell people, why are you sending money to us? You don't need to send it to us anymore. You're all done. You don't need to send it anymore. And that's really the issue that people need to be aware of is, where does your money work the hardest? I don't care what somebody's commission is. I don't care what the vehicle is. I care what the results are.
Am I getting the outcomes that I want? Yep.
That's exactly
Harlan, you've been doing this for a while now. What's the most relevant and legitimate reason or argument against reverse mortgage? And what would your own rebuttal to that be?
Yeah, there's only four. And I categorize this thought about this a lot because, like you said, I've been doing this for 24 years. And there's only four reasons why people don't want to do a reverse mortgage. And we abbreviate it as LIFE, L-I-F-E. And the first one is L, lose. I'm going to lose my house. I'm going to lose my equity. I'm going to lose something. And the truth is that you do give up equity, but you give it up in exchange for something else. So it's not about losing, it's about trading. So we have to explain the difference between losing and trading. You are trading your equity for something else. You're trading your cash flow to go into bucket two instead of into the bucket of the house. The next one is I, that we've already touched on, the inheritance. Well, might be fine for me, but it's going to be bad for my kids. And that's where we explain that life insurance and Roth IRAs are a far superior way to pass on wealth as compared to giving them a house. There's better places if you're concerned about giving an inheritance to your kids or grandkids. There's better ways to do it, far better ways to do it than the house. And then F is fear. We have to address that basic fear, and it's just amazing how often that comes up as well. I don't know. I don't know if anybody else is doing this. I just don't think it's a good idea. And then E, the last one in life, is expensive. And then that's where we just have to compare. Yes, it costs this, but you gain this. If you give me $1 and I give you back $2, is that fair? How many dollars do you want to give me? And so but I would say, in answer to your question, if I had to pick one, the biggest single thing is that fear of loss. I'm going to get kicked out of my house. My wife is going to get kicked out of the house after I die. I'm going to lose my house. I'm going to lose my equity. I've worked for 40 years to clear the mortgage, and now I'm going back into bondage. Some Christian people say, you're just putting people into bondage with more debt. And I've been a Christian for years, and I've talked to Christian pastors and congregations about the Dave Ramsey financial peace stuff. And there's a lot of good stuff in there. But when it comes to reverse mortgages, it's 100% wrong because there is no servitude. When I do a reverse mortgage, there's zero servitude. I don't have to make a payment. I get the statement every month. I just got one yesterday. Look at this. It's really cool. It says this is not a bill. I mean, I owe $576,000. It says this is not a bill. I like that. Until I am 150 years old, I do not have to worry about making a payment. Why would everybody not do that? Not just a farm kid from Wisconsin who never went to college. Why would everybody not do that? So again, long answer to a short question, Carson, but the fear of losing something. And when we can explain, no, you're not losing something, you're actually gaining a tremendous amount. You're gaining cash flow, you're gaining a net worth, you're gaining control, you're gaining safety. Once they understand what they're gaining as compared to what they're giving up, it's really a no-brainer from there. But the interesting thing is the biggest problem we have is people not showing up for appointments because they say, yeah, I talked to my buddy about it and reverse mortgage is not a good idea. We called up my son and he said it's a bad idea. So we're not going to, we canceled our meeting. That's the biggest struggle is let's just talk about it.
If only their son understood that, like, hey, You take that, they can afford to live the rest of their life and even buy other products. And now you inherit $1 million tax free or through whatever modalities, right? You inherit a net $1 million versus you inherit $500,000 inside of real estate that you got to turn around and sell, pay a commission on. Maybe you're in a rush and in a financial bind, so you sell it quicker, so you don't maximize the market value out of that. I think it's a very, to your point, it's a very inefficient way. It's not that it's a bad way. It's that there are more efficient ways to pass on wealth, for sure.
Exactly. I always tell people, they say, are you saying that my dad told me to pay off my house and that's stupid? And I said, no, it's not stupid. It's not wrong. It's just incredibly inefficient.
Yeah.
Yeah. I think
sorry, Peter.
With that, it's for most people, that is the pinnacle. Hey, I made it. I got my house paid off. And I have all this equity. And I like to ask my clients when we have those conversations, like, well, if you had a savings account that you took out 30 years ago and you were going to put $1,500 a month into that savings account for 30 years, at the end of the 30 years, wouldn't you want to be able to take some money out of the savings account?
Yeah.
Well, yeah. It's like, okay, well, isn't that kind of how your mortgage works? Yeah. It's like, okay, so how do you get the money out? It's like, there's really only 3 ways. You either sell the house, you sell the asset, and now you have the money, but you don't have somewhere to live. Or you take out a mortgage, right? Whether it's a home equity line of credit or you take out a traditional mortgage to get at that equity, but now you've got a payment again and your house isn't paid off anymore. It's like, or there's the third one is you do a reverse mortgage and now you get the best of both worlds. You have a place to live until both of you take your last breath. And you get to actually access the money that you've been setting aside for the last 30 years to deploy, to use, because that equity is not going to buy groceries. You can't walk into Kroger and go, no, it's okay. I got $500,000 in equity.
I tried that, Peter. I walked in with a picture of my house to a gas station and he said, that'll be $52 or whatever. And I said, oh, here's my house. It's worth $1 million and it's paid off. So can you just put it on my tab? He said, we take cash or credit card. I said, yeah, but it's worth $1 million. And he said, sir, take cash or credit card. And I mean, he was going to get mad at me. He didn't care that my house was worth $1 million. He really didn't. And so it's weird. I mean, that people just don't realize that there is no value there. When I've offended people, I said, did you know that 100% of your home equity is worthless? And they said, no, it's not worthless. We got $1 million house or we got a $500,000 house. I said, no, it's worthless. It's 100% worthless. Did you know that if you wanted money from your life insurance policy, you can get it like within 5 days? Did you know that if you needed money out of your annuity, that they'll send you a check every month and you can actually spend it and you can use it for the tank of gas? It's just weird how people look at something like it's sacred, which is what I've specifically talked about in my book, is that, the sacred cow stuff, because it all goes back. It's really emotional. You guys aren't old enough, but in the 60s, I was going to mortgage burning parties with my dad. That was a big deal in the 60s. Somebody would pay off their house, pay off their farm, and you'd go to this mortgage burning party in Wisconsin. There's beer and cheese curds and brats and everything else, and it was this big celebration.
Everything you would expect out of a Wisconsin party. My hell.
Some kind of badger somewhere.
Yeah, we had maybe a blown up badger. And so then this guy'd come out with the mortgage, light it on fire, and everybody would cheer. And so I asked my dad, I remember I was about 8 years old. And I said, Dad, what was that all about? I mean, that was a lot of fun running around with my friends and everything, but and it was good food, but what was that about? And he said, well, son, they got rid of their mortgage. We're not done with ours yet. We will be soon. And then we'll have one of those parties too. Because, if you have a mortgage and the bank calls the mortgage, we could end up getting kicked out of our house and you wouldn't even be able to sleep in your bedroom tonight. That will scare the hell out of an 8-year-old kid.
How about you tell an 8-year-old, Pat? Age-appropriate conversations, Dad.
Peter, I told my kids worse things. You know this, but
yeah, I know you.
And he was they did it because they wanted us to realize that the banks were evil and they'll take you back. And I mean, look at the movie "It's a Wonderful Life." The evil banker is going to kick everybody and take their house away.
Literally, the scene that came to my mind.
Yeah. That big old fat evil banker, he's going to kick them all out. I mean, the guy almost committed suicide over it. And so, I mean, it's crazy that this is ingrained into these baby boomers' heads. And it's like, I'm doing something wrong. And once they understand the facts, but that emotion, and maybe an answer to your earlier question, the biggest problem is just stemming the emotions and helping people to deal with facts. A lady came to me, I was speaking at a financial planner conference, I think it was in Atlanta a number of years ago, and she came up to me and I said, she said, what are you guys doing or whatever? And I said, well, we do the reverse mortgage. She said, oh, I said, are you coming to my keynote at 3:00? And she said, oh no, I don't believe in reverse mortgages. I said, well, ma'am, this is not a faith-based product. This is a math-based product. And if you believe in math, you should come to my seminar. And she did, and she started referring business, but she wasn't even going to show up because she didn't believe in them. I mean, it's weird that people start attaching that much emotion to something that is 2 + 2 is 4, and it always comes out the same every time. It's just frustrating because they know they can have once they understand it, they can have a better life. Do you know that out of the 1,000 people that I personally work with, and we send them letters and stay in touch and everything, not one of them and I've worked with thousands more, but just mine personally that I did, not one of them have said they wish they wouldn't have done it. Single biggest complaint when we send out surveys, I wish I would have done this earlier. And the other thing, and this is really cool, I was sitting with my advisor, and this is something that I want to get out to all advisors. I was sitting with my advisor and some clients that we had just helped, we were just delivering the final life insurance policy, had closed the reverse mortgage, he'd done all the long-term care stuff and everything else. And the guy said, so are we done with everything now? And I said, We've got it all. We got your plan. We're going to talk to you every year about what's going on. And he said, wait, there's one more thing that you guys have not done. I said, well, what's that? He said, I want to buy life insurance on you guys. And I said, well, why would you want to do that? And I said, you really can't. I said, Jason, my advisor, I said, can you explain insurable interest to him? And so he did. And he said, yep, I got an insurable interest in you guys. If you guys die, nobody knows what you guys know. I mean, this is totally different than anybody else out there. I need you guys. And he was kind of half joking, but not really. And that was the best pat on the back that I got. And I think that Jason got too. We weren't selling products. We weren't some product sellers or salesmen. We were people that changed their entire family's trajectory and the lives of him and his wife. And he recognized that. And that's what I love about this business is when we combine, there's a ton of things that advisors can do that are really cool and really smart and very helpful. And it's really cool what we can do with reverse mortgages. But put us together with an advisor, we can supercharge what they do. They can supercharge what we do. And we can just change the world, at least for that one person, one at a time. And at Movement, our slogan is we exist to love and value people. And that's what's really cool about what we do when we're working together with an advisor. We're not only loving and valuing that advisor and making their business better, but at the same time, or a realtor, like we talked about earlier, but we are changing that client's life forever.
So for our folks that want to reach out to you, we've got a whole bunch of, thousands of insurance agents and financial advisors that tune into us. Should they reach out to you personally if they want to learn more? And I'm going to go as far as to say anyone who doesn't fully understand what a reverse mortgage is and how it actually works is ignorant and cannot be a fiduciary. I don't give a damn what your license says you are. You are not. So they really ought to reach out and learn more. And I know we're going to do some other stuff in the future here to help provide those learning opportunities. But should folks reach out to you directly? I know you've got a team that's nearly nationwide. You've got folks all over the U.S. How should folks get a hold of Harlan and Movement Mortgage and learn more?
Yeah, we've got a website landing page, movement.com/reverse request. And I've got a little QR code too that I could pop up on the screen, but just movement.com/reverse request. And they can also reach out to me, harlan.accola@movement.com. In fact, if any of them want one of my books, I'd be happy to share it. I'm not trying to sell books. I'm trying to change people's lives with their financial planning. I'll get a book out to an advisor. And then what I do is some of the conferences I do first with the advisor and just kind of go through the details. And then I have a team of people anywhere in the country, and let's say it's in Seattle. Well, Michael Joy will take care of them. If it's over in Florida, George Verban will work with them. And all of them have been trained by me personally. All of them know the same system. Some of them, sometimes they like those people better than me. I just, enjoy working with them. So you're not going to see any drop off when you're working with one of our specialists because they know about life insurance. They know about all of the things that I've taught them and that I've learned through the years with all the people in your industry. So if they just reach out to me at Reverse Request, we start there and then assign whatever their needs are. And sometimes just a discussion, and they just want to talk to me about how does this fit? But I will say this, any advisor that thinks that a reverse mortgage is for a few people, we need to talk to them as soon as possible because it should be incorporated. That's like saying only a few people should get life insurance. And when your kids are gone from home, you don't need life insurance anymore. When you quit your job and you've got money in your 401k, you don't need life insurance anymore. We know those people are ignorant. They don't know what's going on and the value of it. The same thing applies to reverse mortgages. And just like if I was ignorant about life insurance and annuities, I would not be a good partner and you would not want to send people to talk to me at all because I don't know what I'm talking about. And so really, we want to educate the advisor first. And quite frankly, a lot of advisors take care of their parents first or their brother or themselves if they're old enough and start with them. That's what I did. I went to my advisor and said, how would this work for me? And even though I wasn't ready for the reverse mortgage, I changed what I was doing. I took my 15-year mortgage and turned it into a 30-year mortgage. So again, I give you a long answer, short question, but bottom line is if we can visit with that advisor, and help them to understand how it works into maybe their personal life, but also into their business, it's a really cool transformation of what they're looking at. It's kind of fun.
Yeah, that's awesome. Awesome. Peter, anything else? Harlan, anything else before we wrap it up?
Well, I think the big thing is don't be like me. Don't just say reverse mortgages are bad and just ignore it, because I would have screwed up my life and my career if I wouldn't have taken that trip to Miami, and if I wouldn't have listened to that life insurance agent 25 years ago. Just be open-minded, because sometimes the older we get, we kind of get stuck in our ways and we say, yeah, I've heard about them. Yeah, that's not really something that would be part of my business. One guy told me at the beginning of our conversation, he said, just so you know, I've referred 3 reverse mortgages out in my 40-year career. So I'm probably not a good partner for you, and we should probably make this pretty short so we don't waste your time or mine. And I said, well, let's just go through it. By the time we were done in an hour and a half, we were going through his personal situation. And he said, I've got 900 clients, and I think about 750 of them, we got to get this information out to. And in the beginning, he said in a 40-year career, there was only 3 that he would be able to help. So that's the thing that I want to get across, is just be open-minded and say, hey, how does this fit? And play devil's advocate. Be skeptical, because your clients are going to be skeptical, and beat me up on any question and say, well, yeah, but what happens here? And what about this? And I heard about that. I want them to be merciless on asking questions, because they need to feel completely comfortable before they ever talk to a client about it.
Oh, that's awesome. That's an open invitation for a controversial conversation. I don't know how you get more candid and open and honest than that. I think that's pretty awesome. So
it's fun. We can have a lot of fun, and not everybody is as smart, good looking, and intelligent as you guys, but we talk to anybody.
Battery won't get you anywhere with me. I've got a good looking wife, and I am heterosexual. So just saying. No, cool. We'll wrap it up here. Harlan, again, thank you so much for being here. I learned a ton. I've been working with reverse mortgage for a while. I don't do reverse, but we've been referring it for almost a decade now. Super excited over the last few months to be aligned with your team. Cheryl and Matt have been amazing, and we hope to continue to send some more business over their way. It's just been incredible. So really looking on expanding our relationship with you, and I appreciate you carving out the time to be here today.
Hey, thank you. Looking forward to it, and we can change a lot of lives together, and that's why I appreciate your influence and what you do, because the more people that we can get this news out to, the better lives are going to be, the better the business is going to increase, and we're going to make a difference. We'll change the world. Thank you guys for the platform.
Absolutely. Absolutely. We'll chat soon, Harlan. Thank you so much.
Thanks,
Harlan.
Catch you guys later.
We'll see you.